I'm Charlotte McLeod with investingnews.com, and here today with me is Lobo Tiggre, CEO of independentspeculator.com. Thank you so much for being here. Great to have you.
Always a pleasure, Charlotte.
Really good to be catching up with you, and I've decided I'm going to upend the way I was going to do this interview initially. I was going to start, as usual, with gold. However, the news with copper, I think, is making it the place we should start, especially because copper was your pick for this year. So just yesterday, we had Trump come and say, I'm not sure how official this is. You can help fill me in. But the 50% tariff on copper is what he's talking about right now. So can you help me break that down and explain what's going on?
Okay, so take it one piece at a time. How official is it? He has said so. Yeah. He hasn't signed the executive order yet. It was something that came out in one of his gaggle meetings, supposedly a cabinet meeting, but really a presentation to the public. And he said 50% tariffs on copper. Exactly what and why, it's kind of gobsmacking because the U.S. imports something like 50% of the copper needs. Like he could put all the tariffs he wants on it, and that's not going to make a single pound come out of the ground more tomorrow than today. The mines just aren't there. Now, the help he's provided with permitting, that is highly relevant, and it has already helped. But that's still, okay, you get the permits, and then you have to build the mine, right? So it'll be years before this incentive creates more U.S. production, if it does. Meanwhile, it's Dr. Copper. It goes in everything. So we've got U.S. consumers, manufacturers, everybody's going to have this added cost. So why do this? Like it's not like China or Russia is where we get our copper from. I mean, are the Chileans really ripping us off that much that we have to, fight back against these evil Chileans? I don't know. I suspect that in this case, it might actually be revenue because copper goes in everything. And if you're going to say no taxes on tips and no taxes on overtime and all this other stuff, well, it's like, why do we tax gasoline? Because everybody has to put it in their car. Well, until recently, everybody didn't, right? So copper goes in everything. It's almost, ironically, perhaps a bit like a VAT tax because it goes into all these things. So you could raise a lot of revenue if that's the goal, if it's really about revenue. But here's the thing. As we speak, the spread between New York COMEX copper, which has just hit another all-time high, just jumped, overnight, and London copper, it's like one of these giant alligator jaw charts. So if you bet on copper in the copper price, as we call it in the U.S., then you're winning big, and copper stocks have moved. But beware that copper, as you and I speak, is cheaper now in London than it was a year ago, even after this big announcement. So this is a classic alligator jaw chart. And the problem with an alligator jaw as an investor is if you stick your hand in there, you don't know if it's going to snap shut because the bottom jaw comes up or the top jaw comes down. And not trying to rain on the parade. I am a long-term copper bull. But this, this aspect of Trump shock is hard to invest on. You don't know how that alligator jaw is going to go. And if you just think, it's a tariff. Americans are going to pay more for copper, but copper is a globally fungible commodity. It's like oil. It's like the sanctions don't work on Russian oil or Iranian oil because it just flows around. Copper can do that too. So it is incorrect to think, copper tariff, therefore copper's up and all copper stocks have to go up. If you're a copper miner in Chile selling to China, then the U.S. tariff has no direct bearing on your business whatsoever. If anything, it's possible that if these tariffs stick at this level, Trump might have just made copper a lot cheaper for China and India and anybody else. Because that copper that's not going to the U.S. is going to go somewhere else, right?
Yeah.
They're not going to put it back in the ground.
Very true. So this is interesting, and we'll keep watching to see how it develops because this is really quite new news at this point. But for you, in your initial thinking, copper was your call for this year. How does this make you feel about that? Because it injects so much.
I actually feel bad. I have all these people congratulating me on this copper call, but I didn't say copper was going to go higher because Trump was going to slap an idiotic, an extraordinarily expensive tariff on it, to the immediate detriment of U.S. consumers, right? So that wasn't my thesis. So I'm not right. The price happens to have gone up as I hoped, doesn't make me right. The other thing is, well, okay, the good news is the reasons why I think copper will go up, all of that is still on the table. And that's basically all roads lead to inflation. The big, beautiful bill is now law. Trillions and trillions in spending, the debt limit blown out of the water by the Republicans. And don't worry, we'll have more cuts in the future. Mm-hmm. So the immediate impact of this is inflationary. And that is coming at a time where, unlike, say, oil, which is necessary and goes up with it, is related to inflation and so on, but it's been in a situation of voluntary supply constraints. It's actually been working through a glut. Not the case with copper. Structural supply constraints on copper side, not enough copper. And going forward, there's another alligator jaw. Just not enough copper projects on the pipeline, not ones big enough to matter. So I'm extremely bullish on copper. All of those reasons to be bullish on copper are still on the table in front of us. And if, when I first made that call, copper was around $4 or something. And now if we're going there at 5, almost 6, and all that tailwind is still to come and push it higher, and it's kind of exciting. I don't want to make price forecasts. I don't do that. But I still see a lot of upside in copper. And my main thing is, and this hasn't really helped people because I've been cautious about it all year, maybe even since the last time we spoke in Canada. I think Trump shock, as that goes from talk about tariffs to the actual impact on a real economy, is likely to weigh on copper. So I've been building cash. I haven't actually been out there buying. I bought one that was on sale for silly reasons. And I like things on sale for the wrong reason. But I've been mostly building cash and waiting for this opportunity to buy. And I think you and I spoke before about this. And I said, look, if I'm wrong, I'll have to pay more for my copper stocks. But I'll be betting on something that I think has 10 years, 20 years, a multi-decade bull run. So I'm okay with paying a bit more if I have to, rather than, because I have 20,000 very best friends looking over my shoulder, rather than say, hey, buy copper, and then it goes down 50% the next month. Like, I don't want to do that. So that's where I'm at. If I'm wrong about a buying opportunity in copper this year, then I'll still jump on board because the thesis is that durable and for that long term. And for anybody that didn't listen to me and already bought copper, A, congratulations. B, don't forget that nobody goes broke taking profits, because there is still potential for downside in copper before this big long-term bull run that I'm expecting goes in. And maybe the thing we're saying here, Charlotte, is, you and others, they ask me my opinion, and in self-defense, we have to think about these things and share our opinions because, the mainstream, they either don't get it or they're completely wrong. But I'm actually not an economist, right? I'm a due diligence guy. People pay me to kick rocks and give a clear evaluation of an investment opportunity, company. So that's what I do. And we talk about all this stuff for context because we have to have an opinion on where things are going. Long-winded answer about, I'm pretty conflicted about this copper thing because, people are patting me on the back, but that's not what I said. So I feel, I wouldn't say a fraud, but I have not been right yet.
I think fraud is maybe a strong word, but I understand what you mean.
I'm trying to dodge anything here.
Yeah. Well, that I think, it gives us a good idea of where you're at with copper. So we'll see how this plays out. I'm sure we'll talk again.
I'm watching it closely.
Yeah.
It is interesting.
What a time. So I'll keep going in my backwards way in this interview. So I wanted to also touch on silver with you, silver and platinum, because they are ones that we've talked about before. And I'm putting them together in my head, although I know the situations are different just because in the last, say, month and a half, the prices have been going. They're both metals where we've seen a large deficit and kind of range-bound prices. So What are your thoughts on what we're seeing in those markets? You can answer them one after another or however you'd like.
It's interesting how you frame it. It's, dear audience, notice how aware she is. um, you know, it is interesting, and you're right. They are different. Like it is one of the things that's had me scratching my heads on this breakout, and silver going up to 37, and platinum is actually outperforming even copper. Platinum, last I looked, was up over almost 55% this year, year to date, which is even by volatile commodities market standards, that is a huge move. Uranium 2 years ago, maybe more, but anyway. But they're very different. Silver is a monetary metal, which, sorry, platinum really isn't, and let alone palladium or rhodium. But silver also, it goes into the solar panels. Platinum doesn't. Platinum is an automotive industrial metal. It goes in the catalytic converters. So it is a bit weird to see them moving at the same time. And you could even think, platinum gas cars, silver electric cars, or more related to the green energy, right? Maybe even contra-cyclical to each other. And so to see them moving at the same time was interesting. It was almost like a month ago, the memo went out and people just started buying any expensive silvery metal because that's what was moving. But since then, they've actually diverged a bit. And platinum and palladium have continued rising, and silver, and oddly enough, rhodium, have gone more sideways. And so I'm actually at the point where I think it might have been a coincidence because the markets are different enough. Not entirely good, but if it's something about Russia threatening the supply of platinum and palladium, that really wouldn't affect silver the same way. Like there's no reason for that news to move them at the same time, other than perhaps just like sympathy. Precious metals are moving. Well, I'll buy anything silvery. Not a good thesis. So where does this leave us? There's talk about, because gold is so high, and I know we'll get there, but because it's so high, Chinese consumers are going with platinum jewelry. I can't confirm that, but I'm not sure if that's true, I'm not sure how durable that is, because if you're wearing a pure platinum chain, it looks like, to anybody who's not an expert, it could be silver. Like nobody would know. Like, so if you're going to show off your bling, platinum, nobody knows. So anyway, that's supposed to be one of the drivers. I don't know how verifiable that is. And fashion is not really something that I invest in. There's also the thesis, and I heard people at this conference, prominent people at this conference, touch on this thesis of the Russians have been selling their stockpiles to fund their war effort.
Okay.
But if that's true, so if that's true and they've run out, then suddenly, that could see prices going higher, especially because we have seen, as you mentioned, a supply deficit. So how is it that prices haven't been moving despite a supply deficit? And one of the answers has been the Russians are selling excess. And so if that just ran out, prices go up, that makes sense. But South Africa is the bigger platinum producer and Russia is the bigger palladium producer. So if it's because of Russia, I would think that the palladium price would be the one moving more, with platinum catching up. And it's the opposite. Platinum is the big mover here. Of the expensive silvery metals, platinum is the one that's made the biggest move. And that's more of a South Africa story. And South Africa's always got one problem or another, or a dozen problems or another dozen problems. But there's no big blow up in South Africa right now. It's not like, the biggest mines have shut down. Though I did look, and actually the big platinum producers, their latest quarterlies, they're all down significantly. But not because South Africa shut down or something. I think it was more like low prices curing low prices. So anyway, long story short, I do think different things are going on. I think it definitely has my attention. I mean, something moves 50% in the commodity space, I have to pay attention. If this continues, I think that becomes investable. Or if there's a way to verify that, yes, it really is Russian stockpiles out, that doesn't get fixed tomorrow. They can't just, suddenly have a new stockpile or something, right? So that becomes investable. This is really interesting to me, and it's something that I'm not willing to just jump in because prices moved. I'm a fundamentalist. I need to understand why this is happening, and therefore why I can believe it will continue to happen. And maybe that's just me. So, dear audience, if you want to go with the got a hunch bet a bunch You know, maybe you shouldn't wait for a cautious old wolf like me to make up his mind. But something's going on there, and it's quite interesting. And I do think it's different from silver. It's striking me that silver has, which is the beginning of your question, I'm sorry.
You get there.
It's bumped up against 37 a couple times, and it hasn't seemed to be able to break through that barrier yet. Not decisively, not stay there. But if it does, I'm not a technical analyst, but if it does, there's nothing to stop it from going north of 40 and probably on to 50, which would be interesting. And 50 sounds like, all-time high. But remember, that's only nominal. I haven't done the math recently, but a real all-time high for silver is triple digits. So I'm not worried about silver getting too pricey or whatever. And I'm actually, the summary here is, as you know, I'm bullish on gold, and I'm bullish on copper, and silver has aspects of both, monetary metal, industrial metal. How can I be bullish on both of those and not bullish on silver? Of course I'm bullish on silver. But since it does have its industrial side, for the same reason that I'm not just going all in on copper yet, I'm not feeling in a rush to buy silver stocks. If I find something that's a compelling value proposition that is not in a basket case country, sure. But I'm not going to buy something in a basket case country because, suddenly silver is going to go nuts or something. There's a lot of ways to get hurt doing that.
Okay, that's what I get for asking a long question, but it was very detailed, and we covered, I think, all the aspects of those metals. I'll try to start moving in a gold direction now because we've got to get there. And you're mentioning, the little bit of hesitance or waiting on silver and copper because of the industrial aspect. So maybe we check in on what the U.S. economy is looking like. I know we've been waiting for our recession, and we've been talking about cracks emerging. So what are you looking at there now?
Well, this is another one where I have to, serve myself a little bit of humble pie here, because we did talk about, and I did say that I thought we would have undeniable recession in the U.S. last year. I think we did have rolling recession, or we certainly had recessions in various parts of the economy, but nothing that the NBER has yet recognized as a recession. It's still possible that they'll go back and retroactively do that. But still, my call wasn't just, weak economy. My call was specifically undeniable recession, and that was wrong. I think, like others, I underestimated the impact, like I was aware of, but I underestimated the impact of all the money printing, what Lynn Alden calls fiscal dominance, or Michael Howell with his global liquidity. Like, these things are out there, they're huge. And basically, my thesis at the time was that we'd have to see the recession and then the money helicopters would go out again. What I didn't realize, that Lynn did, to give her credit, the money helicopters never landed. We had, at least in the U.S., $1 trillion plus deficits the whole time, wartime levels of deficit spending, even though we had the greatest economy ever, according to the last administration, according to the new administration. Now we have the greatest economy ever, but we still need to have wartime levels of deficit spending. So this is highly inflationary. It's directly relevant to gold as a monetary metal, silver as well, but gold is more recognized. And, when you see, it's Jeff Gundlach, the bond king, famously or infamously recently joked about gold not being something for lunatic survivalists anymore. It's become a real asset, he said. Now, he was poking fun at himself because he's been long gold for years, so he wasn't insulting anybody there. I don't think on purpose. But that's happening, right? So you see not just the occasional guest on Bloomberg or Yahoo Finance say, "Oh yeah, we're hedging our portfolio with a bit of gold too." Like, the hosts are even saying, "What are you doing in this environment? Gold?" Like, it's one of the first things that comes up. It's really becoming recognized as. And heck, Basel III, gold is a tier 1 asset now that banks can put on their books and get recognized for that, not silver. So again, I'm not an economist, I'm just a due diligence guy, but in this context, it seems to me, all paths lead to inflation. This has to be good for real money, monetary metals, especially gold. It's the most recognized one. Ultimately, it should be good for both. But I can see it happening for gold first, which is no surprise to a long-time silver bull, right? Gold moves first and then silver catches up later, right? I'm not saying anything new. Well, I guess the crux of the question now, though, is, well, has gold gone too far? Is it time for some correction? It is actually, as we speak, correcting somewhat. We're certainly down from 3,500 to under 33 last I saw. And my answer to that is, don't forget the money helicopters. They're still there. I doubt we would see a really big correction. I mean, it's interesting to think, gold could drop $1,000 an ounce and it would still be 2,300, which is a higher price than all the gold mines in the world operating today were built assuming. Right? The mines out there today, they were built, Barrick back in the day, they were modeling on 1,200, and I think they upped it a bit. But a couple years ago, assuming $2,000 gold would have been extremely aggressive price assumption. That's $1,300 below where we are right now. So the actual business of mining gold is just printing cash right now. And if you're an explorer with a project of merit or a developer with a feasibility study, and that study is, even if it's just a year old, it's going to have a price assumption that's more than $1,000 below current prices. And it's not just this flash today spot where, here we are in July and we've been north of 3,000 for the better part of the year. Not all year, but the better part of the year. So this is really significant. So what I'm saying is, all paths lead to inflation. I'm very bullish on gold. Can it correct more? Yes, no doubt. Does it really matter in the scheme of things? No. I mean, what it matters is that I think it creates a buying opportunity. Like what I'm saying is I'm not worried about gold going down, not down for the count. I don't think we're in a situation like 2011, 2012, where the next big move is the bear market, multi-year bear market. If there is a big correction in the near term, because, I don't know, there's peace in the Middle East, and never mind Ukraine, that doesn't matter. Of course it does. But, if for some reason people just decide, oh, we don't need no stinking safe haven assets, right? Yeah, okay, gold can, but I will be exceedingly surprised if it corrects very far. That makes it investable. And then don't forget the money helicopters. I think it comes back in. So I'm very bullish. I don't expect a major correction. If we get one, I will be selling blood, having garage sales, maybe sell a couple extra kids or something, see how much money I can raise. And I would be buying with both hands on that because I would be that confident that would be a gift.
I'm glad you went in that direction with gold because I see just among our audience. Well, no, not at this moment.
That's a big now.
Yeah,
That's probably sell.
Yeah, that's we won't sell our kids. But I'm glad because I see people commenting in our audience, just looking at the price right now and feeling nervous about that level compared to the 3,500. So it's good context, I think, for people who are.
Or if you think about it, 3,500, most of our audience doesn't really believe in CPI, CPI, whatever you want to call it, right? But still, it's the number we have. And if you adjust gold for CPI, 3,500 is actually very close to the 1980 peak. So we keep talking about, it's only a nominal high, right? Well, actually, if gold bounced off a real high, at least adjusted for CPI, that's significant. And we might not believe in CPI, but Wall Street does, and comics traders do. Right. So I think I don't think it's unreasonable for people, as bullish as they may be in gold, or people who understand that gold really is money, right? And fiat is a fantasy. Even in that case, seeing it bounce off a real high is significant. So I think it's not unreasonable to ask these questions, how low could it go? And that's why I'm saying it can happen. But I really don't think we've got a lot of downside. Things that would have been bad for gold in previous years, we've had several of them this year. I mean, heck, the 12-day war ending, right? Oh, we have peace now. That would have whacked gold a lot harder in past cycles. And here we are still, 3,300. I don't want to be Theoden at Helm's Deep saying, is that all you got, Saruman? Because bad things happened after he said that. But it's impressive how these things happen and the walls are still holding at, well above 3,000, which again, it's a phenomenal price for the actual business of gold mining and exploration and development, which is what we speculate on.
Okay, and that's the second Lord of the Rings reference I've had in the last 2 days at this conference. So very interesting. This is what everybody's using right now. I don't know. I will throw in one more topic before I let you go. So uranium. It is the spot price is on the move, and you can tell me if I'm wrong, but I believe before that started, you were saying, okay, I'm starting to get interested in uranium again. Maybe this is a time to be looking at buying. So I'm curious, what made you think that? How did that play out for you?
I've just said I'm not a technician, but actually the charts had a lot to do with that. Well, it's two things. One, as a fundamentalist, the real uranium market, if you will, is the long-term contract price. And the long-term contract price went up and up over to the high 70s, and then it kind of went sideways. It never rolled over. It's still there, actually. It hasn't really corrected at all. It's gone up to a certain level. It's consolidating. And it's possible that it will roll over, but it hasn't. And I think it's more likely that the next move is upwards. So for me, as a fundamentalist, that's the fundamental, is the real market hasn't corrected this. So the spot has, and if you look at real versus, or long-term contract versus spot, spot goes above and below. It's like a rubber band goes up and below. So it overcorrected and now it's coming up. So as a fundamentalist, that's my view. And then I'm looking at the charts and I'm seeing that, okay, it's coming back up and it does that. It's volatile. So that just, a bit of a rebound, that wasn't enough. But we say there's a time when a market carves out a bottom and, a volatile spike is less likely to be the bottom, but when it carves out a bottom, let's not get into why, but that's a more durable signal. So it started doing that. And then the other thing was that this bottoming action, it lasted longer than other false bottoms on this way down, this 18-month slide that we had. So between the fundamentals and this technical signal, then that's why I decided to go long again. Now, unfortunately, more recently, though, we had Jim Cramer decide to jump on the uranium bandwagon, and he literally said, buy everything uranium.
Jim, no.
And maybe it's pure coincidence, but that happened to be when this rally in uranium just rolled over. I kid you not. If it wasn't the same day, it was pretty close. And there's been a significant drop in uranium since last week when Cramer hit the buy button on CNBC or whatever he does. I forget what network he's on. Sorry, Jim fans. Just check the facts on me on this one. It happens to be true. So, but tongue in cheek, aside, I was in a position where I thought uranium was bottoming, and I put out a big shopping list, half a dozen uranium stocks to my clients, paid clients, not just everybody. And I always let them go first. And then, by the time it was my turn, the prices had gone up, so I didn't buy anything. And then it just kept going and going, and I didn't want to chase anything. So I actually haven't bought any of those things on that list. And so thanks to Jim, I might actually get a chance to back up the truck on some of those opportunities I missed earlier. Because we have a significant bout of volatility right now. And so the carry home advice on this, or not advice, we don't give advice. What I'm doing with my own money is I'm looking at Jim Cramer's gift here, and I'm like Santa Claus checking my list twice here because I'm that bullish on uranium going forward that, like we were just saying with copper, if we get a buying opportunity here, or gold, an absolute gift, and I want to be ready for it.
What an interesting effect from Jim Cramer. Very interesting. All right. Well,
I feel kind of bad calling him out by name because I don't normally do that. But it is a fact that he said that in just about the time that this happened.
Well, we will name him this time. I know I need to get you back out onto the floor, but any final thoughts that you would sum up for everybody?
Yeah, Trump fans hate me for saying this, but I'm not being anti-Trump when I tell you, dear audience, don't underestimate Trump shock. Don't assume the worst of it is behind us. We thought peak tariff was April 2nd, but just now we've got 50% tariffs on copper. This is huge. This isn't, some oddball metal that could be worked around. It's Dr. Copper. It goes in everything. So it is clearly a mistake. And I think the broader markets have been far too sanguine about the Trump agenda. And I do think the money helicopters are part of that. There's just so much liquidity there that the market responds more to good news than to bad news, which is bullish for gold. But anyway, the point, though, is that we're not done with Trump shock. And when I say that, I'm not saying Trump is evil or I hate his agenda. It's neutral to the agenda. Even if I completely agreed with everything Trump was doing, I would say, and I am saying, that what he's doing is a major change, and that can't be painless. So as an investor, as a speculator, you can make volatility your friend or you can let it steamroll you, but don't underestimate it.
Okay, I think we'll wrap up there for now. This was great. Thank you so much for coming on to go through all the different topics with me.
Thank you, Charlotte.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Lobo Tiggre with independentspeculator.com.